Cash dividend. Dividends are payments made by a company to its shareholders out of its post-tax profits. When a company issues a cash dividend, each shareholder receives a set amount of money per share owned. For example, if a shareholder owns 100 shares and the cash dividend is $5 per share, they would receive $500. Shareholder received amount but share price falls accordingly. In given example, share price falls to $95 and shareholders' total net worth is same before and after cash dividend amount. Dossier. Important dates. Record date. Any shareholder holding shares on this date will receive dividend amount. Pay date. This is date on which shareholder would receive dividend amount in his account. X date is generally 2 days before the record date. Any trade happening on and after X date is not eligible for dividend due to T+2 settlement cycle. It would not be settled before record date. If record date is 01 Feb and pay date is 1st March, then X date generally will be 30 of January. If shareholder buys share on 1st February, then he will not be eligible for cash dividend as trade is done after X date. If shareholder buys share on 31st of January, then he will not be eligible for cash dividend as trade is done after X date. If shareholder buys share on 29 of January, then he will be eligible for cash dividend as trade is done before X date, but it must be settled by record date, which is 1st February.